Assalamualaikum and salam sejahtera. This video is prepared to discuss on tutorial 1 topic 3. Okay, alright, so what is it that I want to discuss here? Okay, so tutorial 1 is about the basic accounting equation. Alright, what are the effect of the transaction on the accounting equation, and then also how to prepare the journal entry for these business transactions. Alright, okay, so we start with the first one. Started business with 20,000 cash. Okay, started business with 20,000 cash means that the owner contribute cash to the business. Okay, so the owner contribute cash to the business. Okay, so what happened here? Okay, so what is cash? Okay, cash is asset. So now the business, okay, the business receive cash. The business receive cash. So the business need to record the cash received. So the cash received is, okay, the cash received is an asset. So what happened to our to the business asset account now? So asset will increase. Okay, so asset will increase. Okay, so asset increase. Okay, when asset increase, do we debit or credit? So when asset increase, we debit. Okay, but you have to state the specific accounts. Okay, specific names of account. Okay, for the asset when you record the journal entry of the transaction. Okay, so here, which asset account that increase? Cash. Okay, cash. Okay, cash. Alright, next. Okay, but okay, look at our journal entry. Okay, in accounting, there must be a duality when we record the transaction. When we record a transaction, okay, there is a duality in the journal entry. You have debit and you have credit. So we don't have any credit account yet, meaning that our discussion is not finished yet. Alright, okay, so we have to record also the who contribute this cash money. So the contributor of this cash money is the owner. Okay, so it's the owner, meaning that this is the amount of capital contributed by owner. So capital falls under owner's equity. Okay, so this transaction, would it increase or decrease the owner's equity account? Okay, so the business has to record the contribution from the owner, meaning that the contribution of the owner is increased. Okay, because we have to record, okay, this money comes from owner, so we are going to record the contribution from the owner. As the owner add the capital to the business, so we are going to add the owner's equity. Okay, so at the same time there is an increase in owner's equity. Alright, okay, so whenever there is an increase in owner's equity, okay, what should we do? We debit or we credit? Okay, we credit. Alright, we credit. But which owner's equity account to be credited? Okay, capital. Any contribution made by the owner, okay, we are going to record in account capital. Okay, but this capital is part of owner's equity. Okay, so it's going to increase owner's equity account. So when you prepare the journal entry, you credit. Okay, next. Purchase a printer of 700 by check for office use. Okay, purchase a printer of 700 ringgit by check for office use. Okay, purchase a printer. A printer is an asset to the company because the printer will be used in the company, okay, more than 1 year. Alright, and it is used for admin purpose. Okay, it is a resources controlled by the business. So a printer is an asset. Okay, so when the business purchase a printer, meaning that there is a new asset added to the business. So what happened to the accounting equation? There will be an increase in asset. Okay, purchase by check. Okay, purchase by check. Check meaning they are using cash money in the bank. Cash at bank. So cash is asset. Okay, so now when they make payment to the supplier of the printer, so what happened to the cash money? So cash money reduce or decrease, meaning that, okay, there is a decrease in asset. Okay, so now to debit and credit. Okay, we know that, okay, when there is an increase in asset, we are going to debit asset account. But which asset account to be debited? this increase relate to which, okay, which transaction, okay, to which item? It relates to the printer. So debit printer. Okay, and then decrease in asset is to be credited. Decrease in asset is to be credited, but to credit which account? Cash at bank. Cash at bank, in short, we call that as bank. Alright, okay. Okay, next. Okay, so bank in cash 3,000. Okay, bank in cash 3,000, meaning that there is a transfer between cash in hand, cash at bank. Okay, so when the owner bank in cash 3,000, meaning that, okay, the owner meaning that the business, okay, transfer the cash in hand, okay, to cash at bank. Okay, so both are asset. Okay, both are asset. Cash in hand asset, cash at bank asset. Okay, so what happened to cash in hand? Cash in hand will decrease. Okay, so cash in hand decrease, meaning that there is a decrease in asset. Okay, so what happened to the cash at bank? Okay, cash at bank will increase. Okay, cash at bank will increase because there is a additional cash, okay, deposited into the bank. Alright, so cash at bank increase, and cash at bank is asset, so asset increase. Okay, so now we want to record. Okay, increase in asset. Increase in asset is to debit. Alright, debit. Which one? Okay, which one, okay, has an increase in its account? Okay, cash at bank. So I'm going to shorten the name, so I call it bank. Alright. Okay, and at the same time there is a decrease in asset. Which asset account decrease? Cash in hand. Okay, cash in hand, in short we call it cash. Okay, alright, so decrease in asset, debit or credit? Decrease in asset is credit. Credit, cash. Okay, alright, next. The business bought a motor vehicle for 4,500 cash. Okay, the business bought a motor vehicle. Now the business owns a motor vehicle. Okay, what is a motor vehicle? Asset. Okay, and then in what way the business pay for the motor vehicle? Okay, or is it on credit? No, by cash. Okay, so cash account affected. So cash account in which category? Asset. So what happened to asset account? Decrease. Okay, so we have here asset increase. Okay, because now the business own a motor vehicle, but at the same time, okay, there is a decrease in asset because the business use, okay, its cash money to pay for the motor vehicle. Okay, alright. Okay, so now to record. Increase in asset. Okay, asset increase debit. Which account to be debited? Okay, this asset increase just now relate to which item? Okay, relate to motor vehicle. So debit motor vehicle. Okay, and then another transaction is decrease in, another entry is decrease in asset. So decrease in asset is credit. Okay, but which asset account is decreased due to this transaction? Cash. Alright, so we are going to credit cash, okay, by RM 4,500. Alright, next. The business owner brought in a personal motor vehicle for use in the business amounting to 14,500. Okay, the business owner brought in a personal motor vehicle into the business. Now the business has asset, which is motor vehicle. Okay, now the business owns a motor vehicle. Okay, So which accounting equation will affect, okay, which item in accounting equation will affect due to this transaction? Okay, asset account. Why asset account? Because now the business owns a motor vehicle, so asset increase. Okay, so how do we get this? In what way we get this asset? Do we pay as per previous transaction? Okay, no, we receive from the owner. We receive from the owner. So we have to recognize the owner contribution. We have to show that, oh, the owner add the contribution to the business. The owner add the contribution to the business. So owner's contribution is owner's equity. So what happened to owner's equity? Increase in owner's equity. Okay, alright. Okay, so now record the journal entry. So asset increase, debit. Which account to be debited? Again, motor vehicle, because the business received motor vehicle from the owner, and the cost is 14,500. Alright, and then increase in owner's equity. Increase in owner's equity we credit. Which account to credit? Account capital, because any contribution made by the owner will be recorded in capital account. Okay, let's look at the next one. Purchase a kitchen furniture for 3,300 from Surya Sendirian Berhad. Issued a check amounting to 1,600 as part of settlement, and the balance was to be paid by next month. Alright, so the payment is not immediate. The payment is not immediate. They pay immediately 1,600, and then they say that, okay, the balance are paid next month. Alright, so there is a financial obligation for them to settle the money in the future. Okay, alright, so there are a few accounting equation items that will be affected here. Alright, so number one, purchase a kitchen furniture. Now the business own a kitchen furniture. So what is a kitchen furniture? That is asset. So what happened to the asset of the company? Okay, now we add new asset, so increase in asset. Okay, so how do we get this asset? Okay, we pay partially by cash. Okay, we pay partially by cash. Okay, so what happened to our cash at bank? Because by check, yeah, so check is cash at bank. So what happened to our cash at bank? Decrease, okay, by 1,600. Decrease by 1,600. So meaning, okay, there is a decrease in our asset, okay, which is cash at bank. Alright, next. Okay, and part of settlement. Okay, another part of the settlement was to be paid by next month. Okay, was to be paid by next month. Alright, so what should we do? We do with this one. So there is a financial obligation. Okay, so you owe them money. So you owe them money, meaning that, okay, there is an increase in the liability because you add your liability. So increase in liability. Alright, okay, right, so now the recording part. Okay, so from the effects, okay, we can see that there is an increase in asset, so meaning that we have to debit something. Okay, so which asset account to be debited? Okay, that increase in asset relate to which item in the transaction? It relates to the kitchen furniture, so we record kitchen furniture. So we are going to debit an asset account for kitchen furniture for the total of RM 3,300. Okay, and then what else do we have? Increase in liability. Increase in liability, we credit. Okay, so we are going to credit here. Alright, so what account to be credited? Okay, so we are going to create account payable. Okay, we are going to create account payable. And then we are going to put the name of the account payable. Okay, because if we did not put the name, then we don't know it belongs to which, it belongs to whom. Alright, so we're going to put the name Surya Sendirian Berhad. Okay, so how much we owe them money? Okay, RM 1,000, the balance, which is RM 1,700. Alright, okay. Next, not finished yet. Okay, there is a decrease in asset at the same time. So decrease in asset meaning that we have to credit asset account. But which asset account being decreased by this transaction? Okay, cash at bank. Why cash at bank? Because the payment was made using check. Okay, so bank will be decreased by RM 1600. Alright. Okay. Okay, next. Okay. Bought used motor vehicle worth 34,000 ringgit on credit from SST Auto Enterprise. Bought used motor vehicle. Okay, so used motor vehicle, meaning that now the business own a motor vehicle worth 34,000. So motor vehicle is an asset. So what happened? Okay, what is the effect? So there is an increase in asset. Okay, increase in asset because now the business add new motor vehicle. Alright. But okay, the motor vehicle was purchased on credit, meaning that they are going to pay the money sometime in the future, not today. Alright, so therefore, okay, we cannot record decrease in asset because no payment was made yet, but in the future. So we're going to create, okay, so what happened when the payment was to be made in the future, meaning that we have created a financial obligation and it is a liability. It is a liability. So what happened to the liability? So now liability increase. Liability also increase. Alright. Okay. So which account to be debited and credited? Okay, asset increase debit. Okay. Which asset account should be debit? Motor vehicle again. How much? RM 34,000. Okay, increase in liability. Increase in liability is to be credited. We need to credit liability account. Which liability account? Again, okay, we are going to create an account called account payable. Okay, and then we have to state the name of the creditor. Okay, which is SST Auto Enterprise. Okay, and also the amount involved, which is RM 34,000. Okay, alright. Okay, the owner brought in additional cash into the business amounted to 30,000 and transferred it into the business bank account on the same day. Alright, okay, so let's look at one by one. The owner brought in additional cash into the business amounted to 30,000. Okay, the owner brought in additional cash, meaning that now the business own cash worth 30,000 ringgit. Alright, so cash. Oh, sorry. So cash is an asset account. So now the business has additional asset. Alright, so increase an asset. Who contribute the cash? The owner. So we have to record the contribution from the owner as well. So owner's contribution will increase. Owner's equity. Okay, what happened next? Okay, the cash money brought in by the owner and then transferred into the business bank account on the same day. Alright, so then we may record this transaction too. Okay, so what happened now? So what happened? Okay, so now cash at bank receive money. Okay, receive cash in hand 30,000. Cash in hand was deposited into cash at bank. Okay, so both asset account, one increase, one decrease. Okay, so asset increase, asset decrease. Okay, right, so now the recording part. Okay, so the first asset, that one is cash. Okay, the first asset that we record just now relate to additional cash brought in by the business owner. Okay, so cash RM 30,000. Okay, cash RM 30,000. Okay, brought by the owner's equity. So increase in owner's equity, we credit. So credit capital. Alright, okay, next. Okay, next, asset increase. Which asset account increase? Cash at bank. Okay, so bank will increase. Bank increase by RM 30,000. Okay, and at the same time, okay, cash in hand will decrease by the same amount, 30,000. This one, asset decrease. Asset decrease here relates to the cash in hand that we deposit into cash at bank. Okay, so cash account will decrease. So decrease in cash account, we decrease in asset account, we credit and 30,000. Alright, okay. So if you want to make it simple, so you can basically cancel the cash and then you debit bank, credit capital. That should be okay. Okay. Alright, if it is not, then we take the long way, which is we record the cash received from the business owner first. So cash 30,000, capital 30,000, and then we show the transaction that we deposit the money to the bank. Okay, so debit bank because increase in bank account, increase in asset account, then we credit cash in hand because there is a decrease in asset account, decrease in cash in hand. Alright, okay. Last one, the business received 30,000 of bank loan from Bank Tani Berhad. So the business received 30,000 of bank loan. Okay, so the business received money. So money is cash. Money is asset. Alright, so asset increase. Okay, so bank loan, cash at bank. So bank is asset. Okay, asset increase. Okay, at the same time, we have created a liability account. Okay, because you take the bank loan. So bank loan has a financial obligation for you to make a repayment in the future. Okay, so at the same time, your liability increase. Okay, that's it for the effect. Now discuss the journal entry. Okay, what happened to the journal entry? So asset increase, debit. Okay, which account to debit? Okay, cash at bank or debit bank. How much? RM 30,000. Okay, and then increase in liability. Increase in liability is to be credited. So credit liability account. Which liability account? Okay, we put it here as bank loan.